Welcome everybody, welcome back to another video here at Liquid FX. So this is something which I don't normally do, but I've responded to someone in the comments and they really wanted to see how I can break down the USD CAD market, right? From essentially the beginning of time up until now, right? So this is USD CAD or USD CAD or UCAD for short. Here we're going to dive into here we're going to dive into analysis on how I am interpreting this market. Okay, so this is the monthly time frame. So we begin on the very high time frames. And what do we see? Let's dissect our structure because this is where we start in price. So what we have over here is we have a structural high over here that gets broken, right? So this is our first break of structure on the monthly time frame. Now, since then we delivered price. Price came, delivered a low, sorry, delivered a high, delivered a low, and we've had another break of structure. So this structure gets broken here, right? This is our second break of structure. So we're very much bullish higher time frame on UCAD, right? And now if we dissect our most recent structure, we had price give us this all-time high over here, which we haven't yet reached. So this is our all-time high over here, ATH all-time high. And what we understand is that, right, this all-time high was created back in January of 2016, so around 8 years ago, just over 8 years ago. And what we should also analyze here is the fact that this all-time high is pretty much giving an equal highs over here. So this here we have equal highs. Okay, so this is equal highs, but overall we're in a bullish market. So what do we need to take into account right now? So few things. The first thing we need to understand is that we had our swing low all the way down here, right? So if I label this as our swing low, and our swing high is simply the all-time high up here, right? So if we just project, so first we've done our structure. So if I just take this to the side for a second, the first thing we've looked at is our structure. The second thing we're going to look at is our PD arrays or our premium and discount arrays. PD arrays are very important. So how do we do that? It's quite simple. We project the Fibonacci tool, the PD array tool, from the swing low all the way up to the swing high. Now, what does this show us? This shows us two regions on the chart. It shows us premium above, or P for short, and it shows us a discount at the bottom, or D for short. Okay. Now, from this, what we should understand is two things, right? Very simply, we should understand two things. Either price could distribute, i.e., go lower. So we could see price give us some sort of a distribution and head lower before continuing higher, or we can very simply just rip higher because we have equal highs up here to target. Okay, so how do we decipher whether price is going to go up or down? Well, the simple answer is we need to use our lower time frames to dissect price more clearly. The last thing we should be aware of when it comes to determining a bias on the higher time frame, as you've seen in some of my other videos, is we need to understand where the fair value gaps are, right? So where are the fair value gaps in price? So this is a fair value gap over here. This is one fair value gap. So this is a potential POI or a fair value gap that we could be interested in nearer the time when price gets there. So this is a POI that we need to be focusing on, right? This is a POI because it's an area of imbalance in the discount, right? So we need to keep our eyes on that, right? So we have our POI over here, potential POI. We perhaps have a little bit of imbalance over here that could be a POI, but this is our first initial POI. So price is well within its rights to tap into this zone before heading higher. So now let's go down to the weekly time frame. Oh, sorry about that. Let's go down to the weekly time frame. So on the weekly time frame, let's dissect price a little bit more closely and see what we have, right? So more recently, what we understand is let's dissect our price structural ranges. We had a high get broken over here. So this is our first break of structure to the upside. And since then, we've created again, like we dissected on the the monthly chart. We have our weekly equal highs up here. Right. So the question in the comments related to the move from 2020 onwards, right? So the move itself related to this price action over here. So all of this over here. This is the 2020 sort of in red. This is what happened in 2020, right? So this is what someone in the comments wanted me to go over, right? So with that being said, let's just dissect what could have happened here in 20. So this is in 2020. At the start of 20, so let's dive into price. So at the start of 2020, we saw price rally up in January, February, March, up until March, right? And then we had the COVID pandemic. And the COVID pandemic happened in March of April, sorry, February, March of that year. And since then, we saw price decline. So on the lower time frame, this would be bearish structure to get involved in, very much bearish structure, right? So let's dissect it from a weekly perspective. Now, from a weekly perspective, what actually happened, right? So we had our swing low down here, and we had our swing high. So what's happening is we're currently dealing in this range, right? We're currently dealing in this range. So let's just project this across. We're dealing in this range where we have a premium up here and we have a discount down here, all below the 50% level, right? So what did price do in 2020? So what we saw is we saw price leave equal highs up here. This was in March of 2020. Price left equal highs. But what actually happened was we saw price head down to this level. So what are the reasons for price heading down, right? There's two reasons why price will head down, right? Typically, there's two reasons why price will head down, or up for that matter. But the reason why price will go down is to sweep liquidity, or it's to rebalance fair value gaps. Those are the only two reasons why price would move up or down. In this case, it's moved down for these two reasons: liquidity and fair value gaps. So with that in mind, let's go and dissect the charts in more detail. So what do we have over here? Right. I can already see two pools of liquidity, right? So what we have is we have a very neat trend line that forms over here. So this trend line here forms liquidity, right? This is internal range of liquidity. It's a trend line that's internal to the range. So our swing low is down here, our swing high is up here. The internal range liquidity, right? The internal range liquidity is this trend line over here. The second internal liquidity is simply these equal lows over here, right? This is a form of liquidity as well. These equal lows over here also form liquidity, right? So that's one reason why we see price head down during the 2020 pandemic. We see price heading down, 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 sweeping this pool of liquidity and sweeping this pool of liquidity. So that's the first reason. What's the second reason price wanted to go down? Well, fair value gaps, inefficiencies in price. So let's see what we have over here. We're going to have to zoom into price a little bit to see that in more detail. We see a fair value gap in the discount in this region over here. So this is a fair value gap in price. So if I just highlight that, shade that in gray, this gives us our fair value gap in price, right? This fair value gap over here in price is an area of interest to us. And this is an area of interest because price has not rebalanced its orders, right? So this is one reason why price was head down, and we see a very clear reaction off here. Now the second region of fair value gap is just below it over here. This is a fair value gap as well, right? So we see two bullish fair value gaps that hadn't been filled prior to the 2020 drop. So this is important to understand, right? We see two fair value gaps getting filled here, getting filled here. So though that is the reason for the 2020 move, for those who want to understand this, right? For this person who asked, I hope this answers your question. The reason we saw a move down in 2020 all the way down, right? When we see price breaking structure on the lower time frames, in this sort of region going down, 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 you have to ask yourself, well, there's liquidity to target and there's fair value gaps to fill in this region, right? We saw a fair value gap just over here, right? This is our fair value gap. This was also our fair value gap in this region. So these two fair value gaps make it the reason for price to move down, as well as liquidity pools to target over here and over here, right? So that's pretty simply what was happening in 2020 in terms of the breakdown in price, right? If we were to notch down another time frame, we can begin to see the last time frame I'll go on is the daily time frame just to see what had happened in that 2020 region. So this 2020 region over here was quite interesting in the sense that what we had over here, let's dissect our prices. We had a very large buildup of liquidity in this range over here. So this was a massive trendline liquidity that gets formed, very typical of the market to generate liquidity in this way. And what do we see price do in March of that year, prior to the lockdown announcements and the geopolitical tensions due to COVID and stuff? We saw a massive wipeout of liquidity, right? So this is a liquidity sweep in yellow, V-shaped recovery. And since then, we saw price heading lower and lower and lower and lower. And the reason for that is because we had higher time frame inefficiencies and imbalances which get filled in here. This here fills inefficiencies in lower time frame analysis, right? From our higher from our higher time frame analysis, we understand that there's fair value gaps and there's liquidity pools which have to get filled, right? And since then, we've seen a casual, we've seen a gradual move up since then. So to answer that person's question and to answer all of your questions about why price does what it does, very simply, liquidity and fair value gaps. So what we understand over here is that we had a very deep discount. Price achieved a very, very deep discount over here, a very, very deep discount. Considering our low was down here, we came all the way down here. So we simply filled inefficiencies in this region, right? So we filled fair value gaps and gave a deep discount. And that's essentially all there is to it, right? So I hope that answers the person's question about what happened to UCAD in 2020. And if you like this video, give it a like, give it a thumbs up, subscribe. We have a lot of source coming your way at Liquid FX. We've got a lot of source coming your way at Liquid FX. Us guys in the team are really working together to bring the best quality education to you. I myself, Liquid FX owner, creator of the Discord community, full access to the course, and free one-to-one sessions for those who are interested, right? So please give us a DM if you're interested, and if you like this video, give it a like and thumbs up, and I look forward to seeing all of you in the next one.